Yo, what's up, everybody? How y'all doing? Welcome to Black Diamond FX right here on YouTube. All right. But before we get into this, I need you guys to do me a favor. Go ahead, hit that subscribe button, hit that thumbs up because I got a banger for you guys. Please hit that subscribe button, share it with your friends, tell them to subscribe as well. All right. So lately, the hot topic in the trading space, especially amongst YouTube, TikTok, Instagram, all the social media avenues have been trades by Sci, ICC, right? And the guy's been getting a lot of hate from a lot of different people because he said he made like 100 million from trading, whatever. Um, I'm gonna tell y'all something. The way he trades, his method, he calls it ICC. I stands for indication, C, correction, and the other C is continuation. The way he trades, his method, his ICC method, I can guarantee you it works because I've been trading that method for a while now. All right. Now I just found out who ICC, well, who Trades by Side is and ICC, his method. All right. But I'm gonna be honest with you, it's the method, if you know market structure, then you can trade ICC. I mean, because that's what I trade. I trade market structure, I trade liquidity. Now, the way I enter a trade is different from the way he enters a trade. I do the I, the indication, which is nothing but like a break of structure. The C, wait for the C is the correction. All right. And then he waits for a continuation where it breaks that high or low. And once that candle closes, he gets in the trade. I don't do that. I wait for liquidity. I want to see on that correction, I want to see price go to an area of liquidity. And I'm going to show you guys what I'm talking about. All right. So let's take a look at this is silver futures. All right. And I can tell you guys, it works. It really does work. All right. Not just me. I know a lot of people that trade this way, and they're very successful at it. They've been trading this way for a while. He just happened to do it a little bit differently, put his name on it, and it works. So I mean, you can't hate on that. You know what I'm saying? You can't hate on the man at all. It works. I can tell you for a fact it works. Now, the first thing you want to do, you want to go to the higher time frame. I like the 1 hour. All right, you can do 1 hour, two, three, four, whatever, daily, whatever floats your boat. You could even do the 15 if you want. All right, but just be mindful. Be mindful when you start using the 15-minute as your higher time frame. All right, so I start with the 1 hour and I want to see what direction the market is moving in. All right, so say for instance, I'm looking at the 1 hour and I'm looking at this right here. All right, so I see price broke, we making lower lows and lower highs, right? So I'm looking at this one here, of course, nothing really happened there. All right, this didn't break this low. I'm looking at this right here. It broke this low here. Hold on a second, let me mark it. Because I'm gonna mark my lower lows. All right. Lower low here. All right. Lower low here. Because it's important, especially when price is in a downtrend. The lower lows are important, higher highs are important in an uptrend. All right, lower low. All right, now what you want to see price break that lower low. All right, just like this one got broken, and then you want to see price come back. All right, you want to see price come back. All right, now when price breaks that lower low, and when I say a break, you want to see candle close as well. That's called the indication. That's the first part, indication. All right, and when you're trading his method, the ICC indication, wherever that indication happens, that's the direction you're going to be trading in. So as price is coming down, break that low, you're going to be looking for sales. However, you don't get in right there. All right. You want to wait for price to come back above where the indication happened at, where the lower low got broken at. All right. So you want to see it come back into, see, I came down here. You want to see it go back above this line. All right. Now this right here, I would not have taken this trade because look what happened. It didn't come back above. It went here. Now on the lower time frame, there probably was something there you could have got in. All right. But I like to see the way I trade, I'm real specific on my trades. I want my price to come back. And that's the correction. That comeback, that pullback, that's your correction. All right. That's your correction. And when you get that correction, what I look for, this is where it differs between the way I trade and the way he trades. I look for that liquidity. All right. So you see here we have fair value gap and we have order block. All right. We have fair value back here, fair value gap here, order block here. That's what I want to see price come back to, but it didn't. It didn't. Look what happened. Since it didn't, look what happened. We came down and it gave us another indication down here. All right. So we broke this low, gave us another indication. Now look, we got this move up. This is called our correction. This is called our correction. Remember I said I look for liquidity. Where is liquidity? All right. You can find liquidity at order blocks. You can find liquidity at fair value gaps. You can find liquidity at highs and lows as well. All right. And what do we have here? A liquidity sweep. We swept these highs right here. See right here? See these highs? That's a higher high that was created. Now, until this high was created, this was a higher high. All right. So we got a liquidity sweep right here. This is the area I would look for my entry. This is the correction phase. Going back up is your correction phase. All right. So now what you do, you find as price is coming up, I'm looking for liquidity. All right. And I see I have fair value gap here, order block here, and this is a high. You're waiting and you're seeing what price is going to do. Now you can go to the 15-minute or the 5-minute. I prefer the I prefer the 15, but you could do either one. And what do I wait for? I wait for what's called a change in the state of delivery. All right. That's the last on this part. That would be the last up candle before the move down that broke structure. Well, the last up candle before that moved, yeah, before they moved down, that broke structure. All right, so it was this last up candle here. Watch, let me show you something. This last up candle, and this is the 15-minute. You could go down to the 5 as well. All right, and once price closed below this up candle, that's where you can get in. Right there. All right, boom. Now, the way I enter the trade it's kind of similar to the because I look for a CISD, changing the state of delivery. It's kind of if you look at it in perspective, if you know technically, the way he enters is changing the state of delivery as well. Because this is an up move from here to here. This is an up move. All right. Although you have multiple up and down candles, it's an up move. All right. And when does he get in? When price breaks and close below here, below this low. That's technically a change in the state of delivery. All right. But the difference is his stop loss is going to be way up here somewhere. All right. Well, way up here. His stop loss, he probably would have entered once this candle closed and this one opened right here. His stop loss would have been way up here. I enter here. All right. I enter here, put my stop loss right above, and then look at what happens. Now you got continuation. All right. So you got indication. That's when it breaks below. All right. You got correction. That's the pullback. All right. Let me put an arrow on it right quick. Let me find my arrow. Correction. All right. Indication. Indication. Correction. The correction is the break. I mean, the indication is the break. The correction is the pullback. And you got the continuation. That's your trade. Going in line with the trend. Continuation. All right. Boom. And that's it. Now he likes to target like this, he would target this low right here. Me, I use structure. All right. So if I get in here, now I could target this because from up here to down here, this low, that's a lot more money than from here or here to right here. All right. So I can target this. And this is what he usually targets, this right here. But you can target any previous structure. Here, you could have targeted this low, this low, this low here probably would have been your ultimate low right here to target. All right, because you see what happened. All right. But it keeps getting lower and lower. Any one of these previous lows you can target, whatever one you're comfortable with. All right. But from me getting in up here, I don't have to go all the way over here. I can just target this low right here. Now watch, let me show y'all something. How much money is this? Take a look. If I sell, oh man, hold on a second. I need to change to my other paper account. This is my contest one. I'm gonna change to this one. All right. So if I sell, watch this, from 53.095 sell limit 3.095 and the take profit was at, and this is one mini contract, right? Take profit, let's say 51.99. Let's say 52. I'm gonna just put at 52. Well, look at that, $5,475. All right, from here to here, $5,475. Y'all see that? That's how I trade ICC. All right. I wait on my correction phase. I look for liquidity. I look for it to go to liquidity. I don't wait for it to break this low. That's a lot of, look, you done miss half the trade. You done miss half of it right here. You get in right here. Say I would have got in here. Say I would have got in, where this candle closed at right there at 52, let's say 52.5. 52.5. Look at that, 2,500. That's over half. All right, 25, which don't get me wrong, 2,500 is still a lot, but you also have to look at your risk. You getting in here, you getting in right here. Hopefully you putting your stop up here, right here. All right, either up here. The ideal or safe space, safe place is here. Because look, check this out. If you put it here, look at what happened. You got wicked right there. All right. So the safe place is always that high, because price shouldn't come back. If it's a true downtrend, price shouldn't come back and break this high. Now, if it breaks that high, then you're going to start looking for potential buy opportunities. All right. Let's look at another one. I'm telling you, this is how I trade, man. I trade it much different. ICC is a great concept. It's just a different perspective. That's all it is, a different perspective. He put a different perspective. Look, this was the setup I had earlier. Look, break right here. Watch this. See this break? See my arrow in my zone right here? Watch, look. I'm gonna go down to 5 minute because I want to show you guys. So look, this was the low that got broken right here. This was the low. Back off. The low got broken. I'm gonna just stretch it all the way across. All right. So look, we got indication right here, right? This was our indication because the low got broken. All right. Pulled back into liquidity. What we had, fair value gap and order block. I had it marked perfectly. Look what happened. Bloop. Right. Tap the fair value gap. All right. Also, it swept these little highs right here, these little 5 minute highs. And look what happened. Boom. Price dropped like a rock. All right. If we go back to the 1 hour chart, it could have target this low right here. See this low right here? Boom. That was your target. And that was gold futures. Then look at that. You could have targeted that low. You could have targeted this low. This actually was a double bottom. You could have targeted that. All right. And look, it even dropped even further, way down there. All right. But you would have been good. You would have been good, man. Now, I would have got in up here. Watch. Let me show you guys again. Remember, remember I said the last up move is either the last candle or series of candles before the down move. All right. So on a lower time frame, the last series of candles up was here. All right. The CISD was here. Candle closed here. All right. And then look what happened. It went up a little bit. It didn't even go half. It didn't even go halfway up. Your stop loss is up here. And then boom. All right. Now this one would have been real close to where he got in at, but it don't happen like that all the time. All right. Because price broke back here. Candle closed. He would have got in. He would have got in like around here somewhere. All right. Not too far from where I well actually I would have gotten in here. Wait, here. I would have got in here. He would get in here. All right. And then I just would have had less drawdown. And then look what happened. See, another fair value gap. This little small one. Boom. You wait a little while, just be patient, and then price would have gave you exactly what you were looking for. All right. But that's the way I trade. I want to show you guys how I trade ICC. And it works, you guys. I'm telling you. Look for liquidity. If you don't know liquidity, I'm telling you, learn to spot liquidity, man. It's going to save you a lot of heartache. It's going to save you a lot of problems. Learn to spot liquidity. Internal liquidity, external liquidity. Fair value gaps, order blocks. Internal. External liquidity, highs and lows. All right. Swing highs, swing lows. Watch this. I'm gonna show you right quick. Hold on. External. Where's the external liquidity? Here, here. Highs and lows. Highs, lows. External. External means outside of the trading range. All right. So if the trading range is from here to here, external is on the outside, meaning liquidity is on the outside. All right. Internal liquidity is inside. Order blocks, fair value gaps, anything on the inside of the trading range is internal liquidity. All right. So I hope you guys find this video helpful, useful. Study it, go over it again, take some notes on it, go out there and smash the market. All right. I hope you guys have a great day. Don't forget to like my video, comment, and subscribe. Share it with about 10 friends. Holla at your boy later. Deuces.